Well, we've just clocked over 7, so and I can see we've had a few more people join us. We may still have a few more that come, but for the benefit of those that did make it on time, let's make a start. Thank you first of all to all of those that joined us for the first half of the session where we were experimenting with speed networking. A few little glitches to work through there, but I think it was a fun and novel idea. Hopefully we can convince a few more people to join us next time, because the more people we have to circulate, the more interesting the networking sessions can become, the more random they can become. And typically we would often have a startup to come in and maybe present their company. And today we decided to sort of focus on a slightly different angle. Rather than having an individual company come and present, we thought we might actually take the opportunity to talk to a few of the founders from within our midst in the Hong Kong ecosystem, and we'll introduce those in a moment. But this is really, I guess, just an open conversation to explore the journey of founders. We labeled it the founders' journeys, trials and tribulations of starting a fintech in Hong Kong. What I might do here is I've got sort of a very loose structure, and I'll work with Ray and Angie on shortly. But Anthony, if maybe you wouldn't mind monitoring the chat for any questions that come in, I'll try to keep an eye on it. But if we have any good questions that sort of come in, let's try to seed them in at the right time, if that's okay. But I want to try to use at least the first part of this to get some flow into it and give our awesome speakers a chance to talk. So with us today, we have Ray and Angie. Ray from Genie and Angie from Assured Asset Management, two quite different companies with different stories. What I might do is throw maybe to you first, Ray, and then Angie. Maybe it's better if you introduce yourself and your company very briefly for those that don't know you already.
Sure. No, thanks for that. So yeah, my name is Ray. I'm one of the founders of Genie. We're a Hong Kong-based fintech company. We launched the first personal financial management app in Hong Kong and one of the first in Asia, which over the 3 years since we launched has helped just under 100,000 people save about $1 billion US. And actually this year we're starting to try to work with more small businesses who are also having kind of similar issues to what we solved on the consumer side, and trying to use some of the technology that we developed for consumers and banks to help them to make better decisions and to run a more efficient business to survive this pandemic. Angie, over to you.
Right. Hi, my name is Angie, and I'm a founder and CIO of Assured Asset Management. So Assured Asset Management is founded in Hong Kong in 2017. And we have two parts of the business, actually. We have the tech side, and we also have the asset management side. So we more focus on providing the unified platforms for alternative investment managers in connecting assets, trading secondary, and also connecting with the asset owner, that we say. So we started from trying to use technology to create financial products so that we can distribute or helping people to make better returns. And then through the journey, we decided to give our tech product a very unique identity as well. So we have this Fintech Grid idea, which is actually a cloud-based for the asset managers to plug in, where they are connecting with either private credit, private equity, or the real estate investment. So that's basically the story about this, to make a short version. Yeah.
Great, and we can unpack a little bit more about both companies as we go through the conversation. Thanks, Angie, and thanks, Ray. So, we have a range of people on this call, ranging from, on the corporate side, startup side, supplier side, consultancy, all with, coming to this with quite a different lens. But, you two are sitting in the hot seat, in the founder's hot seat, and the big question I think that a lot of people asked is, why start a fintech? What was your motive to do this? And if you think about also Hong Kong as a market and and sort of the opportunity size, maybe Ray, you want to kick us off? I mean, you're thinking on this. What was the big motive and
It's a hard question. I was going to give it to Angie.
Yeah.
Well, she'll get her turn as well. So.
Yeah. I was working in banking, so I was at Citigroup for most of my career. So I spent my entire career in the banking side, mostly on the trading side. It felt like there was just going to be a huge change that technology would bring to the table, and I didn't feel that Citi would be the sort of main driver of that change. I felt that they would be someone who kind of moved along, but there was definitely a lot of opportunity, and I still think that. We started on the consumer side because that was the easiest, because I was also a consumer, so I know what I didn't like, and so it's very easy to solve those problems. And then as we got more mature, we started to work with some banks, some fintechs, things like that, and start to see more opportunity there. And then this year, actually, I think more than any time where I've run this business, there's actually more opportunity going forward than there's ever been, partly because the traditional resistance and a lot of the way that things were being done before, as particularly in finance, have just been so clearly proven to be ineffective, right? Once this crisis hit, that I think that you'll see in the next 5 years that some of the companies that are able to adapt and look for the pain points that opened up will do really well. And for us, I think the pain point that we saw small businesses just getting killed. And the same problems that were coming up about cash flow management, about understanding different scenarios and forecasts. The amount of financial forecasts increased this year 30 times over the year before, because guess what, people are very concerned about cash flow all of a sudden. And I think that these are things where if you bring software to the equation, there's still a huge opportunity to build a good sized business. And it's, I think it's an interesting place to be, coming from the sort of trading side.
Mm. And just to sort of pick on that a little bit. So it sounds like you felt that there was maybe a seismic shift about to happen, and the company that you went in weren't necessarily going to take full advantage of that. But equally, you were seeing there was pain in the customer experience or in the propositions that existed. How much of that was a motive of, I'm going to solve that problem because it's so painful to me or my friends, versus perhaps I have a strong desire to build something?
Oh, it was the former. So I wanted to solve it for me. I learned after a year that's not a very good way to build a business, because I did successfully solve that problem for myself at great expense and solved it for a lot of people. And then I found out that it's a famously hard space to make money in. You're charging consumers for helping them with finances in Hong Kong, where people don't like to pay fees. So difficult business, but we solved the problem. So that was good. And then, I think it was, after that, it became about how can we use the technology, the people, the experience we have to solve other problems that will, hopefully make more money for us and for our poor investors who, at some point they need to see some returns, right? So I think that was the catalyst. And I think for me, it was a very naive approach, but I don't regret that, because the other thing I've got friends at Citi who at the same time were like, oh, I'm going to quit after my next bonus. And they're still there 4 years later, right? And so you have to start somewhere.
Yeah, no, thank you. And we will get onto sort of investors later on. Angie, to you, what was the sort of key motivation for you to start a fintech?
Yeah, I still ask myself that questions. I'm in Hong Kong, right? All right, so very similar backgrounds that me and Ray actually shares. I started from a trader. So I started trading for a very well-established Taiwanese bank over here in Hong Kong. And then I moved to asset management. Through all my career, my job is actually to basically trade and find the yields, either for the principals, the banks, or for the clients, basically all those investors or the LPs in the asset management side, right? So through times, like in particular, especially in the era where people start trying to actually expand to China, So the capital stuff from China start to go out to look for opportunities, or the institutions over here start to go into China to trying to search for expansion of the market over there. You gradually to realize that a lot of opportunities or investment opportunity, that's what I say, or a lot of returns do not really come from, we call that conventional tradings, like, the security that we know about, the secondary stock tradings or the bond trading. They are more moving into, we call that unconventional, which is actually what we say alternative investment. And sometimes when we spot a very good investment opportunities, but if you add on all those costs of operating it, risk management it, due diligence about it, and then of course the access, all those things, ended up you don't really make that much. So I think the ideas came from, we started to want to look for solutions to trying to make that cost of investment become lower in a way, so that you can preserve a big portion of the yields, not actually going out to pay all those infrastructure works or whatever the excess, but more to the investors, where actually the money or the funds that actually take the principal risk. You start to have that idea about it, and you start trying to look for the solution about it. And then the solution comes from when you want to adopt certain kind of technology to actually reduce the operating flows, right? And it starts from, the information stream, the operating efficiency, or in order to be able to access into multiple different platforms or originators of the same asset class, just every possible way you can think of to trying to reduce that cost down. And I think that's where the idea came from. And that's the reason why motivated me to actually think about the solutions. And then we move into the era where the fintech start to come into the attentions of everybody. They also started from China, right? So once that sort of attention came in, and then you start to think about, all right, maybe instead of trying to interview each different service provider to see if they can give you something that fit into your needs, why don't we create something from my point of view? Because I was the user and I know what's the pain point I actually face, and then see if I can actually make that process or generate a product based upon that sort of I would say like more customized kind of solutions to be able to reach to the end goals. And that was where the idea came from, at the very, very beginning. But I still think we are very brave to choose Hong Kong as a big tech company here.
So I mean, on that, just to build on that last point of Hong Kong as a market. So you have this romantic big idea of changing the investment world, particularly for alternatives, and bringing the cost down and making them accessible. I mean, thinking about some of the challenges of Hong Kong as a market, and I, this might be interesting to other founders or potential founders on the call. The size of the market, it's not like we're not a Silicon Valley. The number of exits here. What is the thinking about moving beyond the idea and the passion into action and sort of sizing up the market. What are some of the considerations that you're going through there? I mean, in terms of, future exits, the market size. Do you want a large share of a small market, or do you think the market's big enough to be viable for a small share? And, in terms of tackling the problems as well, is it truly unique to Hong Kong? Are you able to import in some of those ideas from elsewhere?
All right. So
like moving beyond the idea and the initial idea into kind of putting it into action and sizing up the business case around it, if you like.
So I think being Hong Kong actually got one advantage is people's understanding and respecting of rule of law is actually there. So if you set up the business over there, in particular when we call ourselves Fintech and more on the finance side, if you set up the whole business over here in Hong Kong, it's in a lot of people's mind, it would be less dodgy in a way. The trust that they have toward the company and the basic operations that you have is there because they do trust the foundations over here, the infrastructures over here. That's good. But I do agree that any founder over here in Hong Kong would actually face I think everybody will face that, but in Hong Kong, you will probably face two things. One is the funding, and the other one, of course, is the business side. Because if you are talking about a business, if you are aiming only Hong Kong as the market, regardless is the future expansions or the imagination of the capital market, it's not big enough. So I would say these two main topics are always for everybody's concern. And in Hong Kong, there was really no, or generally speaking in Asia, I won't say it's Hong Kong, I think generally speaking in Asia, there is a very little concept about angel investor. So we do have the experience of investing in the US companies. And then you could see there are tons of similar ideas, but they would twin them into different development of business. And every single company actually have their very own investor. So they could actually put a business idea together, make it like a deck, and then start to go around to all those, we call that angel investor or the investor. Mm-hmm. Big or small, you don't need to be a VC or angel fund format. It could be like an individual, a family, a professor, or someone, and they all have that concept about, okay, I'm investing some ideas and then waiting for the ideas to bloom, to grow. So you do have that sort of market, but Asia, generally speaking, is quite few. So you would need to think about how do you start your business is either by your own funding, or if not, then what sort of angel funding that you need to, you need to have that, we call that fan base. And that fan base is basically how, at least for me, that's how I started it, from that fan base. And that's what I think, if you want to be a founder over here in Hong Kong, particularly in fintech founders, you would need to consider how do you actually approach the market where there was really little concept about angel investor. How did you get yourself started? I think that's the first challenge that I would say that, and then you move on to round A. And so
I might park you on the funding bit, because I do want to come back to that in a bigger way, and I might throw to Ray. I mean, Ray, when we had the offline discussion, you sort of shared some of the observations of the Hong Kong, some of the realities, I guess, of the size of the Hong Kong market and what that means for a startup. I don't know if you want to kind of recap on some of those. Yeah, particularly around around the size of a company, and we talked about ExpressVPN as being a Hong Kong company that's thinking globally versus maybe a Hong Kong company that's focusing on Hong Kong or just Asia, and some of the realities of market sizing around that.
Yeah, I mean, so it's another thing that I was very naive about. But, to me, Hong Kong is not a market for software, right? So the software industry is one where you have very high fixed costs and you have very low marginal costs, and you need to sell it to lots of people to cover the cost of these engineers because they're quite expensive. And I think Hong Kong actually has some very good software companies, but people don't talk about them as startups. GoodNotes is one of them. Very good business. ExpressVPN, very good business, right? They're software businesses. And if you said ExpressVPN just focus on the Hong Kong market, they'd be like, you're crazy. This like, why the world is such a big place? Why would we just do a VPN for Hong Kong, right? And I think for me, and it's one of the problems I think in fintech I see a lot, is that I was not ambitious enough. I look at the companies that I admire out of Hong Kong, right? And you look at like the Relabs and the Acumons of the world, right? And they had the confidence to go to China early, right? In some cases they went to Southeast Asia, right? I think Hong Kong is the beginning and end. It's never going to be big enough, right? And then you have, as Andrew said, the investor market. Most of what you read about investors comes from the US, right? And it's like, oh, make this 10-page Sequoia deck and things like this, right? But the reality is, in America, if you look at the richest people, like the angel and funders that Andrew was talking about, right? So of the top 25 in America, only one of them is over 90. Of our top 5, 4 of them are over 90, right? So, and then you've got, where did they make their money? Well, 9 out of 10 of the top riches in Hong Kong are from property, 9 out of 10 in America from software and technology, right? So, it's a completely different dynamic of people where they've made money. And the challenge is, can you invest your rich grandfather who made his money in real estate to invest in TikTok when it's just an idea? That's a very different ballgame to the US, where you're looking at like some guy who's maybe 50, 60, made $50 million investing in, you know, companies like you, doesn't want to do it again. It's a lot of work being an entrepreneur. He's like, look, I'm happy to just pay someone else to do it, right? They've made money doing that before. So we've been very lucky, but I think one of the things that we, you know, have to be better at and are getting better at is being, you know, more ambitious and more outward thinking. You know, even if you're a fintech company.
So it's be prepared to take a large stake in a small market, or think a lot, or think outside, think beyond Hong Kong to properly scale it, both from a, depending on the problem that's being solved, from an opportunity perspective, but I guess from a story perspective to prospective investors as well. Having the size of the opportunity becomes bigger than the investment upside, also it becomes more attractive.
Yeah, I think if there's no upside, you know, your chance of failure is the same. So you're 90% chance of failing, but then if you win, then you're like a modest-sized Hong Kong company, which is not particularly exciting for people, right? You know, versus being potentially a global player. That's the dream, right? And you know, I think that's the reality of trying to make, you know, a software company work in Hong Kong. And for us, you know, we did a product that was for fintech companies and for banks, right? We spent most of our time pitching in Hong Kong, but of the first 4 customers, all of them were from overseas, right? And I think that also shows that even when you can't travel, you know, there's a lot of opportunity out there, and it can be frustrating if you feel you're banging your head against a brick wall in Hong Kong and you're like, oh, there's no opportunity, but maybe in Australia, maybe in Brazil, maybe there's something. The world's a big place, right? So I think that's something that, again, maybe sometimes we get a bit too comfortable here.
And maybe, so Angie, back to you in terms of moving past the dream into the realities of market dynamics and sizing. You're starting a business, it's moving ahead, you're starting to think about your founder team, and then your first hires, perhaps even where they're situated. I think, you know, it's an interesting dynamic now with remote working to challenge the constructs of where's an office. And you know, what was some of the thinking and some of the learnings that you have across that early part of actually standing up a core team and starting to build something, particularly for maybe some of the other startups that are on the call around, you know, those very early foundational business building pieces? Right.
Yeah, I have to anchor on right about that. When it comes to tech, anything about tech is really funny to see, although people talk about fintech a lot over here. But our clients at the very beginning, or big clients, or the implementation, majority of them are actually overseas clients, and to be specific, like American clients. Like, you know, that's the interesting thing about it. So yeah, going back to the questions. Yeah, once you get everything started, then you started to actually do the business. So like what we say, the business that we get originally idea was to actually use tech, creating the financial product, and then to make people think, like, you see, we implement all those technology to do the streamline of risk management, to do the streamline of operations, and also to do the streamline in terms of the assets to the assets. Then we generate these amazing products and that return much better with this like low volatility. And then we do this back testing with all this giant big database, because with the help of technology, you can do a lot of things in terms of data mining. You can run all sorts of different models on the stress scenario, all sort of things. And then you have these perfect numbers, the lines that lay in front of them. And then you present to them and they start like, but it's nothing like what I know before. So the market looks big or seems big, but the understanding or the willingness at the time, at least, when we just got started, wasn't actually as popular as we think. we thought that we actually have something that amazing with a combination of tech and financial product. And then we have something that's positive to people. How come it's not appealing? So we start to look into if we actually choose the wrong market. And then gradually, I think we very quickly come into the awareness, the fundamental thing about the difference in terms of the software and thing like finance. It's people are willing to try things new. So you are willing to download something new or try something new when it comes to tech side, because that may bring you some kind of different user experience. For example, like Zoom. So people are willing to download Zoom. And then there was other kind of like, online or web meeting room or something. But when it comes to the finance part, trust is very important. So the new financial product does not necessarily mean that you will get a popularity among the target group or the target investors, because they need to look at the brands. They need to look at a lot of things to build their trust toward a financial product. And that's why we gradually start to think, so how do we, or should we reposition ourselves and then kind of trying to create something in two different categories. And that's why we have our current business model where the tech side is the tech side and the asset management side is the asset management side, where the asset management side still implement a lot of things from our tech teams, and our tech teams generate still all those software and all those systems for the financial side. But we market as an individual kind of service and product. We don't try to just incorporate them or encrypt them into the financial product and only distribute the financial product in the market. That's how we learn that. I won't say in the hard way, but yes, we learn that in the hard way. And that's what I say. Like when you are in Hong Kong, you would see different aspects of how people see tech and how people see financial products. And that's the good things. But at the same time, you also need to make sure that you do adopt yourself to think about, why do you build your business over here in Hong Kong? So then we came to the sense thinking about the reason why we build our business over here in Hong Kong is we want to have people's trust in terms of the way we run our business and the way that we actually position ourselves in the fintech world. If that's the case, then maybe Hong Kong is more focused on the financial product per se, so the asset management service, while the tech service is supposed to be for more different type of market, like American markets. And that's probably the easier group of clients that we target to, because there are also a lot of asset managers that actually manage on the alternative side. So yeah, that's what we do at the end, and that's what we do right now currently as well. So that's our journey.
Are your team spread out in that way, or are they largely based in Hong Kong? Do you have people in different time zones in different geographies?
Yeah, so we started having our engineer team very close by. Like, I think everybody got experience, right? So you do have very expensive engineer over here in Hong Kong, but in order for you to build a bigger team and to reduce the cost down, you will have the CTO or your very senior engineer over here in Hong Kong, but then you will have an engineer team in like Shenzhen, China, or Guangzhou. So we started very similar like that, just like what everybody is doing. We started having our engineering team over there in China. And then when we gradually to look into, or maybe we should start to have the financial products, financial services. And then we should start to actually have the different identity of our tech product or tech service. Then we gradually start to look into what's the market that we are aiming. And if the market is mainly more on the US side, then maybe we should start to having the engineer on the other side of the world, just for the sake of building, the user, the UI, will be similar. Time zone, speaking to the clients will be similar. So yes, right now we do have a separate engineer team in Argentina and in the US in San Fran. And that's how we get closer and closer to our clients. And we do good, in particular good in the last years, because that's when everybody, like what you say, they started to have the needs to actually implement more technology, either from the banking side, the asset management side, and also from the alternative lending side. So that's where, yeah.
And Ray, what about you? Maybe just talking briefly about the spread, geographic spread of your team.
Yeah, we're very concentrated in Hong Kong. So I think we did some remote work. I found the engineering market not bad in Hong Kong actually, but you can get good quality people, but there's not much depth, is what I found. So you can't have it's very hard to ramp up quickly like a team of 30 or 40 people, right? But if you are able to hire consistently, you know, one person here, one person there, there are some pretty decent people out there. But actually, yeah, I kind of echo some of the points made, because I think that one of the things that I've learned is that, you know, actually you can have a remotely distributed team. You can make it work. Like everyone having to work from home, we've had to be more creative. I haven't heard about having tech teams in Argentina, but that sounds, you know, but definitely, you know, I think that, you know, there's opportunity to have people in different places, and there's no, you know, we are Hong Kong headquartered and that's where we live. But one of the things that I find very liberating now is that actually, that doesn't mean our market is Hong Kong. That doesn't mean our staff needs to be in Hong Kong. You can actually have a software business and clients can be anywhere, staff can be anywhere, and you can live where you want. If I'm honest, the reason I'm in Hong Kong is I like living here. My family's from here. If you asked me as someone to like justify, is this the best place in the world to have a tech company? Practically, maybe not, but low taxes for me, it's a nice place to live, you know, so it's more of a personal choice.
Yeah. Can you hear me okay? I'm having some headphone problems here, so I'm just going to sort of switch, but
problems as well,
I wanted to, we touched on the topic of funding earlier, and I wanted to come back to that. We've covered some ground, but when you're starting out thinking about, you know, how do you actually pay for this thing, bootstrapping, we talked a little about angel investing, and then obviously you know, as you grow, you might be looking to scale, you need to kind of secure some VC funding. Maybe Ray, you can kick us off with sort of your experiences there and anything you'd be willing to share. Well,
the first round's really hard. I mean, because the reality is that the product at that point is usually non-existent. The clients and the metrics are non-existent, and you probably don't have much of a track record. We were lucky. I had savings from my last job, and my co-founder had just sold his company in the US. And it was a fairly public exit. So it was a NASDAQ listed company that bought them. It meant that the people who had money in it, you know, made some money back. So there's some dry powder, and that helped us to get a bit of a head start, so to speak. But that money runs out quite quickly. So then it's like the first angel round was really, really difficult. The first seed round was not easy either, because we had to get VCs, and we ended up getting some out of Europe and Vector Ventures here and things like that. But also not terribly easy. Since then, a little bit easier. I think that once you have trajectory and revenue coming in and things that people can look at, it's a lot easier here. But when it's just a pitch deck and an idea, I think that's when some of the US investors have more experience, because they've seen these businesses change, you know, pivot, move around, you know. I think they're much more familiar with that and comfortable. But I think here most people want to see quite a lot of metrics, you know, before they move. Yeah. And Angie, maybe just over to you in terms of your experiences.
I agree.
On the funding side. Yeah.
I do agree. I think Hong Kong doesn't really have the angel investor or seed investor kind of concept. So yeah, having external investors at that stage is particularly difficult here in Hong Kong. So again, we got lucky, because like what we say, it's either you need to come out of self-funding, and that's one. And the second thing is you probably need to have one or two backers. We call that a fan. So I was lucky, like my former company, so the company I was working before, they are very supportive about me having my own company. So they came in as the very first seed investors institution. So that make everything slightly easier to start. And then this is not a cheap place to start business in every possible way. So you need to think about all the possible way to cut cost. But regardless, when you are at that stage, you don't expect you set up the business and then 3 weeks down in the road, you will have a product. And then 3 months in the row, you will have revenue. So the first year or the first 18 months, it was burning. So you constantly need to thinking about where your next run is. So that experience wasn't easy. It wasn't easy, over here in Hong Kong. So having established my experience, having a one core, we call that a core baker. Was quite key for me at the times to start everything and then to smooth to a level where I can start book revenue and can start to scale up. And but my experience is because I used to be on the other side. I used to be the investors, right? I used to be the one that people come to pitch and they're saying that, oh, my company represent XYZ amount of money. To be honest, if I'm going to run the fund again, which is I'm probably going to do that very soon, I'm still going to go back and look at different rather than being harsh again. So my experience is round B or round C would be quite difficult because that's the time when you start to have certain kind of revenue or business models. And then you would start to justify your valuations. Why aren't you big enough? What stage are you on? And that would be bigger in terms of ticket size and then bigger in terms of valuation. So you have a lot of things to convince them. And we are probably sailing into that direction, that stage. So yeah, funding is never be easy, but yeah, I agree. I anchor that angel and seed investor over here in Hong Kong is really, really not easy.
And Matt, thanks for sharing some questions up here. There's a lot to unpack. I'll just take one for now. A question around new business and sort of, I guess, biz dev or sales cycles. I mean, what's been the learning, Ray, maybe just to pass back to you around the realities of actually moving beyond an idea to executing it technically to actually selling it and making money from it?
So I think, the sales process, do you mean in Hong Kong or sort of in general?
Yeah, I guess, I mean, not necessarily just in Hong Kong, but as a startup yourself, just moving from, executing on a pain point, creating a product, selling it. And this probably leads a little bit in if you want to sort of move into the pivoting part, which we talked about. I mean, if you start off with an idea and you might realize that hypothesis wasn't as robust as maybe you thought, and that you may need to change, but thinking also particularly about not just on the idea, but around actually revenue and customers.
Yeah, I mean, it was interesting because, when I started it, I thought it was crazy that I can't understand how much money I'm spending by looking at my bank statement. I mean, that's all my bank statement is meant to do. And I don't know what it means. It's gibberish, right? And so I set up this company and I was like, okay, we build all this tech to understand it and let's sell that back to banks. And I think I was a bit disappointed by the lack of ambition, to be honest, especially in Hong Kong, for what they considered a good banking experience to be. Like the bar was set really, really low. And so it wasn't particularly enjoyable, I would say, in part because what's exciting is to do really ambitious, big things, right? And to build really quickly. And I think what I noticed here is that the regulator's not particularly easy, the environment's not particularly easy, there's a lot of legacy infrastructure. So it was a lot of kind of like big discussions and ideas, but very little kind of practical movement. And you can see that as a consumer, right? I think like for all the efforts of people. But having said that, the FinTech Association and the people on the personal level are terrific, like really supportive, really trying hard. When I speak to people in America, they're like, oh, it's a knife fight. The other startups are trying to kill us. People are trying to sue us. Like it's everyone out for themselves, right? And here, there's some really, really good people really trying hard. And I think like systemic barriers stopping them doing exciting, fun things that would be, globally worth talking about, right? Open banking being one. I took a really big bet for the company that open banking was coming to Hong Kong because that's what HKMA told me. I wasn't experienced enough to know that they were not that serious about it, right? So I was like, okay, well, we'll raise some more money. We'll build all this infrastructure out because it's going to happen in the next year. And it didn't really happen in the way that we expected. Meanwhile, it did happen in Australia. It did happen in Europe. It happened in Korea. It happened in Singapore, right? So, I think that doesn't mean that people were not ready and would not have made a really, done great things with it if it'd been there. But the reality is there's not a lot of catalyst for opportunity, right? And I think that makes the sales cycle difficult when you're starting out because the benchmark is, in my eyes, when you start, your product's going to be okay. It's not going to be amazing, but the opportunity and the pain needs to be so big that your first clients, like we had a fintech company in Europe who used our product. It was not designed for Europe. It performed terribly, but they were furious at us. But that's a good sign. It shows they want it. They wanted it to work. They were upset that it didn't work. They gave us time. They chased us to try to get it working, right? That's an easier sales cycle because there's catalyst for them, there's pressure for them. But I think we didn't see that. But things like fintech associations, Cyreport, different people at different banks, really great. So it's a strange experience. And now we're working with small businesses. Again, lots of entrepreneurs, really good people, need help, trying hard, desperate for whatever technology they can to get them through this, anything, right? Government is sort of supportive, but in the same way, still quite slow, right? Not particularly aggressive, I would say. I think there's a lack of aggression and ambition sometimes. So that's kind of my general experience of the sales cycle here. But I think it depends where you go, but I think where the opportunity is big and the pain's big, it's always a bit easier to get the players to move.
And in terms of, I guess, the learning through that sales cycle and pivots, which we hear a lot about, and when we spoke offline, you sort of compared yourself to a ballerina having pivoted so many times, and starting very much with a clear view on the problem that you were solving with a B2B model, and then kind of moving into B2B2C, and then even now sort of small businesses. What just sort of reflecting on that, what are the signposts that brought you to change, that sort of were the factors that made you sort of make those pivots or those change of direction decisions?
Oh, it was easy. Made product was popular, low acquisition costs, and it was growing. So great app. This is a common app story. Then found hard to make money from app. Tried to make money from banks and fintechs, made some money, but then the problem is that the actual market size ended up not being huge. It's okay, it pays the bills, but it's not exciting. And also from a human resources perspective, not that fun actually. So some of this stuff was like, how do you keep people engaged? How do you keep them, like really motivated? Really easy on B2C when you're doing something to help people manage their finances, right? Like people will sign up for that. But then it wasn't quite as interesting. Then we started to look at small businesses. Okay, feels like there's a lot of pain there, a lot of problems to solve. We did our first POCs with companies that were saying, look, what's the correlation between different things on our accounting and different expenses to COVID? Because we're trying to scenario plan and make budgets. And if COVID lasts an extra month, does that mean I need to raise another round of funding? Or does it need, like, what does this all mean, right? And the same technology that we had built to do AI forecasting for enterprise, that works the same for small businesses. We built this actually for lenders. So we said to lenders, oh, you want to see the cash flow of your companies in the future, see which ones are going out of business. Well, it turns out that's also very good information for the companies themselves. So just going, I think pivot is the sexy term for this stuff. But we're businessmen, and I don't regard myself any different from the restaurant owner who is closed at 6 p.m. and has to try to make money from delivery and change the menu, right? The market changed. Some opportunity that was there it wasn't easy to travel, so that was something that thought saying to banks can't travel, it's going to make life hard. But then the business opportunity maybe gets bigger. So that's kind of what drove us. We just always kind of like trying to find where we thought the opportunity was bigger. I don't know if Angie, that matches your experience.
Yeah, I'll just do a quick time check for folks on the call. I'm going to try to wrap this up around 8, give or take a few minutes. I've got 2 more questions I want to ask, but I would like to hear Angie on this one as well. So, we were talking about sales cycles, biz dev, and sort of as you work through those problems, how does the business evolve and pivoting? You've already explained that you started off as a asset management company that had in-house tech to try to solve that problem, and then actually realized through time that the tech in itself was a proposition that had a market as well as and distinctly separate from the asset management part. Perhaps you could just sort of share some of your learnings, particularly the signposting around what helped you sort of realize these decision points.
Right. Yeah. I think every single founders in Hong Kong must come from an institution. So especially in the fintech world. So at least all the founders I come across, we all had the experience working for a big institution, the big banks over here. So how I started network. So my original network, the original networks where I have the trust from some investor or some institutions. I don't start it from 2C. So I'm mainly facing institution. So when it comes to institutions, yeah, I do have some pen. The pen would be like, yes, like individual level, like we like you, like we've been working with you for a long time, we do. But when it comes to institutions, to another institution's financial product, you will have certain kind of benchmark you need to do, right? For example, you need to have minimum 3 years track record. And then your manager will need to have since you need to have 3 years minimum track record, I mean the manager need to have 3 years minimum in track records as well, and then you need to
the asset management side, right?
Yeah, and then you need to meet XYZ the amount of AUM. So for a startup, that's completely impossible. But why do they have to set up all those qualification or benchmark? It's because, like what I say, trust. How do I trust you in giving me a financial product that will actually achieve the target return that you are talking about, and with decent risk management, track record, and all those kinds of benchmark or guidance is the one that their risk management team is actually seeking after. So that's where all the pen started. So we ended up not having Hong Kong-based institutions that invest in us. We actually started having overseas institution that's willing to try, because the assets or the alternative that we were providing is more on the private credit side. And the private credit is probably more well received in the market like China, because back to the days, banks and like those fintech platforms in China, they're all invest in alternative credit, right? SME credit, personal credit. So credit in their eyes are actually kind of acceptable. And based upon that, if you wrap it like a proper financial product, SFC regulated, and also got a tech to back it up, so it's easier for them to understand. So we ended up having our very first bigger sale from a China bank. As ridiculous as it sounds, yes, from a Chinese bank. And then Korean. So we started to have 2 Korean institutions that invest in us. So we started having that. That's a very interesting experience, actually. And then that's the reason why we started to realize that maybe there are a lot of fund managers when we were talking about, would that be possible, saying, for example, if we can leverage your amazing risk management engine or your trading engine for this type of assets, and then we can create the product ourselves, would that be possible? It's from that conversation that we started to realize that people's approach to financial product and tech product are different. And then we start to think, all right, sure, if we start to offer you that, risk management engine, the data management tool, the analytic tool, then you could create the financial product you see may suit. But because our expertise is in alternative, so it's in alternative credit, in alternative equity, then we do have the nature of connecting with the platforms that originate those deals as well. So naturally, you will have all those originators that come to the platform. That will be easier for you. And little by little, it becomes a very well-rounded, like, financial cloud kind of idea. And that's how our sales circle, that's our experience actually. But yeah.
No, great, thank you. And we've covered quite a long journey here, from inception of an idea, pain point, market opportunity, where do you go for local, international, starting the very first few steps on sort of standing up the business, sales cycles, pivoting, learning. You both obviously have a lot of knowledge and battle scars from this experience. What would be the one, perhaps two things that you could give your young, bright-eyed pre-founder self, if you know what you know now? What would be the one or two little nuggets? I'm not sure. Maybe Angie, if you'd like to go first on that, or if you need a little bit of time, we can flick to Ray. But just to think about the benefit of hindsight, what might you tell your younger self, knowing what you know now?
So being a founder is not an overnight thing. It's actually taking a lot of planning and a lot of thinking as well. If you do, like, at least for me, when I had the ideas and I was started to actually, I won't say collecting, but I will start to think about what the resources that I have. And the resources that I have, meaning like investors, what sort of investor, what sort of investor, what sort of market, what sort of networks, and where could I find those group of people in terms of networks? So if you ask me what's the key things to set, I won't say a founder, I won't call myself successful. I'm just having a title as a founder. But what sort of thing to start me up is actually the community and the networks and the community that could actually give you the resource. And where do that community and network comes from? It actually come from me personally, from all those years of professional life. And me, the conscious awareness of trying to start a business on myself and for myself, and what sort of resource I should have. So I started to gradually do that plan. So that's one thing. And the second thing would be the partners. So I think sole founders, I do see people do the sole founder, but it's very rare. So you would have business partner, we call that co-founder. And having a good and right co-founder is also not easy. And like the business, the partnership doesn't need to get it right the first day, because you probably see eye to eye the first day, but down in some way when you start a business, you probably don't see the same directions and you probably don't see that suit. So having a decision, having a good co-founders or right founders, co-founders, right core teams is very important. But making the decision to say goodbye to anybody that is not right suit or to each other, it's not really like right suit to me, but maybe to each other, is also very important. So I would suggest, if you do have the idea trying to start things, do it, but do it in a planned way. So you need to start to think about like what sort of resources, what sort of community, what sort of networks you need to have, what sort of help that you can get, and then what kind of business partner that you wanted to create as well. So yeah, that would be my experience. If you are talking about advice, that would be my experience, my humble advice from my experience. Yeah.
Thanks, Angie. Ray, what about you? What's the gold nugget that you could give to the younger 3-4-year-old version of you?
It's just to be more ambitious. When I first started, right? I'm lucky. I mean, I've been, I love to rant and rave, but we're about to close a funding round, and it's because we have ambitious investors who are always pushing us to do better and to do more, right? And to think bigger. And it's taken me years to work out that they're not just being mean to me, they're actually trying to help, right? But I think the thing is that, if you want to be the best, if you want to do something game changing, if you want to do all these things that startup founders say they are, you can't accept mediocrity, right? You have to be surrounding yourself with ambitious staff, ambitious co-founders, ambitious investors, ambitious clients, right? Everyone around it has to reflect that, because if everyone is there to do a job and to keep the status quo going, you can't expect to have an extraordinary outcome. It's just not possible, right? You'll get something that is average because you're doing all the things that an average person would do. And I would say to myself, be more reckless, take more risk, do more things that you would never have done, upset people, argue with people more, right? I think sometimes, I regret, maybe I was too nice, we're too nice to each other, everyone, right? Everyone's so cordial and polite and friendly, but actually, is that getting stuff done? I think it's another thing with the government and the FinTech Association, and everyone's trying hard, right? But maybe I regret not arguing more with people and saying, look, this is just not good enough. This is, Hong Kong should be number one. We should be leading at this. We're not leading at it. We need to accept it and not pretend that everything is okay, because it isn't, and it's not good enough, right? And that's probably the thing that I would tell myself. I don't know if it's good advice or bad advice. It could have led me to some very bad places. But,
no, but it's for yourself. So it's the message that you give to yourself. It's not necessarily for anyone else. So I think it makes it very specific advice to the younger version of you. And I really appreciate both the shares there on that one. Very sort of honest and open and humble views. Just to wrap up, before I wrap up, one final question from the FinTech Association of Hong Kong, and maybe from an ecosystem perspective more generally, what do you need the likes of the FinTech Association of Hong Kong, or perhaps even the government, the sort of the ecosystem parts of Hong Kong to be doing differently or better? Where's the opportunity to improve things there?
I have one idea, which is something that is my pet project. I think we need to change the tax system here. I think in America, one of the reasons there's such an angel investment community is if you invest in a startup and it fails, you can write that off from your taxes. I think people here are very logical. There's tons of money. I think the whole angel investment thing changes if you say, if you invest in a science park or Cyberport-backed company or something related to FinTech Association or whatever, if it goes wrong, you can write the investment off up to like $1 million Hong Kong dollars off your taxes. You would see a wall of money come into the ecosystem, and people wouldn't know what to do with it, right? And it would completely change the dynamic of why Hong Kong, why all this stuff, right? And I think that for all of the initiatives to make more talent, to create more innovation, I think money can solve a lot.
So tax is a solution, but the problem statement kind of being more around how do we unlock or create a pool for more angel type investing into early stage companies to, what are sort of some of the incentives or in this case, tax benefits that we can think about?
Yeah.
In America, when I speak to Americans, that's why they invest in these crazy companies, and they want them to fail. They're like, fail fast, take it off my tax bill,
Yeah, I completely agree with that. So if you ask me I won't say one advice or comments or one things, I would say that it probably create the more investor pool. I mean, cheaper rent or some corporate support, like funding support for startup. Yeah, it's good, but nothing is as vital as seed fund or angel fund. So how do you create that environment, or how do you create a pool of angel investor? Yes, for the people that a startup over here to go to pitch to or speak to, or you have that communities where, it will make the life of a startup much easier. Otherwise, majority of the time we do rely, at least for the very beginning, the setup, we do rely on ourselves very much. And I think I won't say that's the hesitations, but you will need to think from day one, you don't have a product, you do have a concept, and you need monies to start to implement that concept. So yeah, how do we create that? I think that's very important for the community.
Yeah, change the tax code. Everything will. Everyone's very, very efficient here.
Yeah, look, thank you. I think that's a super interesting space, and I think something for us to take away as an organization to explore more. Let me thank you both very, very warmly on behalf of the FinTech Association of Hong Kong, and also very personally on this one, for your honest and candid conversation. It was a pleasure to talk to you both, and thank you very much, and we wish you all the best with next steps.
Great. Thanks, everyone.
Have a good evening. Thank you.
Bye-bye.